Thank you. So gold could go to $10,000 an ounce because of all the hooch being poured into the punch bowl by not just our Federal Reserve, but central banks around the world. What does Scott Minerd have to say about this, Chief Investment Officer of Guggenheim Partners? Scott, so good to see you. I missed you the last time you were here. Apologies for that. Scott, do you think that gold could really go to 10 grand an ounce?
There is a scenario where I think gold is over $10,000 an ounce. And I don't think it's that crazy, Dagan. If you start to look at things like the ratio of the money supply to gold, historically that ratio has been between about 25%. The total value of the Fed's holdings of gold has been between 25% of total money supply versus 120%. We're currently sitting around 20 to 25%, which means gold could easily go up by 5 times from where we're sitting today. And those numbers don't include the money that's coming in the new round of quantitative easing, which could take us even higher.
Does that logic apply to all assets like gold? And why gold versus a copper, if you will, even a home at this point? And again, you know, the great thing about, if you're talking about inflation, you borrow money and buy an asset that appreciates, that's your best bet.
Well, I think homes are exceptionally cheap, and people should be taking advantage of that. I know I've personally bought a number of properties over the last year, and given how much leverage you can get, it makes a lot of sense. Copper is an industrial metal, and it gets driven around a lot by industrial demand, especially with, hard times coming in China and in Europe. So it's really hard to directly link copper to this monetary easing, as a first order effect. But Dagan, what's interesting here is we don't even need inflation for gold to go higher. The reality is that with all this money coming into the economy out of the central banks around the world, people are having more and more concern about inflation in the long run, and they're looking to buy things where they can store value. And gold is easy. One of the things that's interesting I've learned about gold myself, because of our investing over the last year or so, is you can go in and execute, $100 million worth of gold and not move the market. If you go in to buy $100 million worth of silver, you'll move the market all over the place. So it's a big, deep, liquid market, and I think that's going to be the destination of choice for central banks and wealthy people around the world.
Even with the additional monetary moves by the Federal Reserve and central banks elsewhere, do you still hate Treasuries as much as you did, say, earlier this year?
Yeah, it's interesting. I remember the tech bubble, and people used to make fun of me in the tech bubble because I kept talking about a bubble from 1998 until 2000. And one of the things we have to remember about bubbles is bubbles often go on longer than we expect, and sometimes go to even more extreme levels than we expect. But the bottom line for anyone who was a buyer of tech stocks in that time, it ended in tears. And I think anybody who's a buyer of Treasuries now, it's going to end in tears.
End in tears for the entire country, Scott. I mean, the tech bubble is nothing compared to a bubble in Treasuries if interest rates shoot up with the $16 trillion in debt that we have. And anyway, I don't want to scare people going into the weekend. Scott, it was good to see you.
It's good to see you, Dagan. Thanks for having me on.
We'll see you very soon. Scott Minerd of Guggenheim.